All right, the drill down is a segment where we drill down in the very essence of a company and the news behind a stock, the news behind a company of a stock in the news. Now, with the focus on alternative power, solar stocks have been on the move, not least Silicon Valley-based SunPower. Now, SunPower makes solar panels, and the stock, well, down 27% in the last year, is up 10% since Friday. Now, the hope for bulls is that there will be an increasing demand for solar as the nation recoils in the fear of nuclear power. But the thing that's driven SunPower stock in the last year has been the vicissitudes of the solar business in Italy. And as the Italian market picked up, there was hope for this stock. Now, a year ago, SunPower did a big acquisition of a company called SunRay Renewable Energy in Europe for $277 million. Now, SunRay is a project developer in Europe and seemed to give the company the inside track on some big jobs in Italy. Now, SunRay did have one benefit to SunPower, regardless of what happened in Italy. It made it look like SunPower's debt went down. So when you look at SunPower, you got to look at SunPower's debt. Now, if you look at a chart of it, it exploded from $700 million to well over $1.3 billion, but suddenly it looked like it dropped. Well, how? Through GAAP accounting, the rules require that SunPower move a big chunk of its debt to the European joint venture. In reality, SunPower still shares that obligation, meaning its financial position might not quite be as strong as a cursory look would suggest. Emily?
Thanks, Cory. Now let's talk more about what the nuclear crisis in Japan means to the future of alternative energy, specifically solar power, with SunPower CEO Tom Werner, whose company makes solar panels. He joins us right now from our D.C. bureau. Tom, thanks so much for joining us.
Thank you for having me.
So first, I want to ask you, what do you think what's going on in Japan right now is going to affect the solar power industry in the short term and the long term?
Well, first, of course, I have to say our hearts go out to the people in Japan. You know, I'm not sure that there is a short-term impact. It clearly makes energy more relevant. If you look at the capacity of the facility in Japan, it's a 4.5 gigawatt facility. Solar did 20 gigawatts last year, so it gives you some perspective of relative sizing. I think that tells you solar is going mainstream. And if you look at Japan specifically, they've been an early mover. They're the largest market in Asia for solar. You know, in the long run, we'll see. But fundamentally, solar can be a great option, I think, and is clearly a great alternative.
So SunPower stock is up right now, but it has been on a bit of a roller coaster. There are dozens of other companies that do what you do for cheaper. So what's so special about SunPower?
Well, there's dozens of other companies, but there's no other company that does what we do, which is twofold. First, we have the world's highest conversion efficiency solar panels, meaning we make more power out of sunlight in the same space than anybody on the planet. Secondly, we're vertically integrated towards the customer. And what that means is we are the channel that delivers the solution for residential, commercial, and utility scale. And what that does for us is it gives us control of our own destiny. And so as we see market disruptions like in Italy, we're prepared to move our product rapidly to other markets, including the rapidly expanding American market, where we have a #1 market share.
Tom, you mentioned Italy. Let me jump right into that. You know, when you guys did the acquisition of SunRay, trying to remember the name there, SunRay. When you guys did that acquisition, you talked about how important it was for getting that Italian business, how, you know, there are a lot of, I think over $100 million of it went into goodwill because it was all about doing an acquisition that was going to get near-term business in Italy. I think the quote from the conference call was something like more than 90% of this pipeline is, I'm looking at my screen here, 90% of the pipeline is near-term in nature and focused in active feed and tariff markets, especially Italy, France, and Israel. Well, now the Italian market, I guess you guys told Morgan Stanley last week that the Italian market has put those projects on hold. Are you going to have to write off that investment?
So as we look at the SunRay acquisition, when we acquired it, you're right, it was near-term business was Italian-based. Had a great presence, though, in many other markets, including Israel, South Africa, Greece, France, England. And we had always thought of Italy as being a couple of years where we would deliver the pipeline of business they had. Admittedly, the Italian market changed sooner than we had originally planned. But we don't know the outcome of that. We'll know at the end of April what the new feed-in tariff, and we believe the feed-in tariff will come out that it will still be economical to complete those projects. At the same time, we've got a really great team in the SunRay development team that's created all kinds of market opportunities, and importantly, in huge market opportunities like India. So we're bullish on SunRay. We're bullish on our investment there in the long run. We're prepared for Italy, little sooner than we'd prepared for, but very positive about how things are going with SunRay.
So it's really all about that Italian tariff. If the tariff is not what you expected, maybe a write-down might be in order?
You know what? You could forecast different feed-in tariffs and get a sense for how much of that pipeline is economical, but it's really not that easy because our costs are coming down. We've taken our costs down by half over the last 5 years. So as we forecast whether to build that pipeline, cost reduction is a big factor as well. So you know, we'll have to see how the feed-in tariff comes out. We're optimistic, and we diversified our way into other markets so that we believe, as a solar company, we position ourselves better than anyone else.
Tom, you're normally out here on the West Coast, but right now you're lobbying in Washington. What are you lobbying for? Does your business depend on subsidies coming back?
Well, I'm here for two purposes in two roles. One is the CEO of SunPower, and one is the chairman of the Silicon Valley Leadership Group, which is a business advocacy group for Silicon Valley to maintain our position as the innovation capital of the world. Now, in both roles is very relevant because the economics of solar, like all energy sources, are influenced by government policy. So that's one. The second is that the jobs in America are greatly influenced by what's going on in Washington, D.C., and we think as an organization our voice matters, and it really helps the policymakers to have a sense of what's going to create jobs.
So does your business depend on subsidies coming back?
If you looked at the end markets for solar, it would be fair to say that the incentives dominate the end markets. Now, solar is becoming economic in more and more markets without incentives, and so this is transitory. But it would be fair to say, and by the way, it would be fair to say of all energy sources, that policy matters and incentives matter. But the majority of the market today, yes. Over time, as we get costs out, ever less so.
Okay, thank you so much. Tom Werner, CEO of SunPower, joining us from Washington, D.C. Great to have you here on Bloomberg West.